Hi, I'm Keith Wilson, founder of Wilson Financial Advisors, and today we're going to be talking about life insurance.
Bingo! How fun!
Yeah, I know it can be a boring subject, but your need for life insurance changes as really your life changes. When you're young, you typically have less need for life insurance, but that changes as you take on more responsibility and your family grows. Then, as your responsibilities once again begin to diminish, your need for life insurance may decrease actually. So let's look at how your life insurance needs change throughout your lifetime. You're going to go through different phases of your life, and this first phase I like to call, as a young adult, you become more independent and self-sufficient. Hey, you no longer depend on others for your financial well-being, but in most cases, your death would still not create a financial hardship for others. So for most young singles, life insurance is not a priority. Some would argue, though, that you should buy life insurance now while you're healthy, the rates are low, and this could be a valid argument if you're at a high risk for developing medical conditions, such as diabetes later in life. But you should also consider the earnings you could realize by investing the money now instead of spending it on insurance premiums. Now, if you have a mortgage or other loans that are jointly held with a cosigner, your death would leave that cosigner responsible for the entire debt. You might consider purchasing enough life insurance to cover these debts in the event of your death. Funeral expenses are also a concern for young singles, but hey, this is typically not advisable to purchase a life insurance policy just for that purpose, unless paying for your funeral would burden your parents or whomever would be responsible for funeral expenses. Instead, consider investing the money you would have spent on life insurance premiums. Now, your life insurance needs increase significantly if you are supporting a parent or a grandparent, or if you are a child, if you have a child before marriage. Now, in these situations, life insurance could provide continued support for your dependent or dependents if you were to die. Now, this next phase I like to call
going to the chapel and we're gonna get married.
Married couples without children typically have little need for life insurance if both spouses contribute equally to the household finances and do not yet own a home. The death of one spouse will usually not be financially catastrophic for the other. Now, once you buy a house, the situation begins to change. Even if both spouses have well-paying jobs, the burden of a mortgage may be more than the surviving spouse can afford on a single income. Credit card debt, other debts, that can contribute to the financial strain. So to make sure either spouse could carry on financially after the death of the other, both of you should probably purchase a modest amount of life insurance. At a minimum, it will provide a peace of mind knowing that both you and your spouse are protected. So again, your life insurance needs increase significantly if you are caring for an aging parent or if you have children before marriage. Life insurance becomes extremely important in these situations because these dependents must be provided for in the event of your death. So another phase of life that you go through is something I like to call
Having my baby.
When you have young children, your life insurance needs reach really a climax. And in most situations, life insurance for both parents is appropriate. Now, single income families are completely dependent on the income of the breadwinner. So if he or she dies without life insurance, the consequences really could be disastrous. So the death of the stay-at-home spouse would necessitate costly expenses such as daycare, housekeeping expenses, things like this. Both spouses should carry enough life insurance to cover the lost income or the economic value of lost services that would result from their deaths. Now, let's talk about dual income families. Dual income families need life insurance too. If one spouse dies, it is unlikely that the surviving spouse will be able to keep up with the household expenses and pay for child care with the remaining income. So keep that in mind. The next phase in life I like to call is,
well, we're moving on now to the east side.
So for many people, career advancement means starting a new job with a new company, and at some point you might even decide to be your own boss, start your own business. It's important to review your life insurance coverage anytime you leave an employer. Now, keep this in mind that when you leave your job, your employer-sponsored group life insurance coverage that will usually end. So find out if you will be eligible for group coverage through your new employer, or maybe look into purchasing life insurance coverage on your own. You may also have the option of converting your group coverage to an individual policy. This may cost you significantly more, but it could be wise if you have a pre-existing medical condition that could prevent you from buying life insurance coverage elsewhere. Now, make sure that the amount of your coverage is up to date, as well as the policy you purchased right after you got married. That might not be adequate anymore, especially if you have kids, a mortgage, college expenses to consider. Business owners may also have business debt to consider. So if your business is not incorporated, your family could be responsible for those bills if you die. So keep that in mind. So the next phase in life I like to call,
I'm single again, back on the prowl. I thought it was perfect.
so here you are. If you and your spouse divorce, you'll have to decide what to do about your life insurance. Divorce raises both beneficiary issues and coverage issues. And if you have children, these issues become even more complex. So if you and your spouse have no children, hey, it may be as simple as changing the beneficiary on your policy or adjusting the coverage to reflect your newly single status. However, if you have kids, you want to make sure that they, and not your former spouse, are provided for in the event of your death. Now, this may involve purchasing a new policy if your spouse owns the existing policy, or simply changing the beneficiary from your spouse to your children. The custodial and non-custodial parent will need to work out these details, and it could be a complicated situation. If you can't come to terms, guess what? The court may make the decisions for you. The next phase in your life I like to call,
Now it's time to relax, so retire and have a blast.
now once you retire and your priorities shift, your life insurance needs may change. If fewer people are depending on you financially, your mortgage and other debts have been repaid, and you have substantial financial assets, hey, you may need less insurance protection than before. But it's possible that your need for life insurance will remain strong even after you're retired. So, for example, the proceeds of life insurance policy can be used to pay for your final expenses or to replace lost income to your spouse as a result of death, like a pension or Social Security. Life insurance can be used to pay estate taxes and to leave tax-free money to your beneficiaries. So take all these things into consideration. There are different phases in life where you need to consider when to purchase life insurance. We didn't really talk about how much life insurance you need to purchase. In this segment, we're only talking about at the different stages in life when you need it. Hope this helps, and if you need to talk to me further, please give me a call. I would welcome the opportunity to discuss your particular situation.